Let's talk a little bit about money and kind of money supply. And so, the U.S. currency is based on a inflationary model. Bitcoin is obviously based on a deflationary model. Just given kind of, again, your experience in markets and really taking this economic perspective, pros, cons, what do you think is kind of your outlook on that deflationary model and if it could work?
So, generally speaking, we did a study of when stocks performed the best.
Okay.
And interestingly enough, they did best under moderate inflation.
Interesting.
Not high inflation, but very very moderate inflation. Deflation is a scary thing for an economy, and if you think about it for just a second, you'll understand why. We are going out and let's say we both want to buy a car, and we need the car. We need it for our job. We've got to get to our job, etc. But we look at each other and we say, yeah, but if we wait a month, this is going to be like $500 cheaper.
Mm-hmm.
And so what happens in a deflationary spiral is you lose the confidence of the consumers. And because they think in their mind that, wow, if I just wait, it's going to be a lot cheaper.
Mm-hmm.
So consumption declines precipitously and people hang on to cash. And so the best case scenario, I think, would be if the various cryptocurrencies didn't have any, they could truly be a store of value,
Mm-hmm.
right? With very small movements.
Absolutely. And that's really because if you have a deflationary model, at some point, take Bitcoin for a second, 21 million Bitcoins will be mined and be available, right? Some will be lost, some will, people won't remember they have them. So there's some, kind of circulation that is actually not accessible.
Mm-hmm.
But for the most part, there will be a set number. And at that point, the logic, I think, holds that, there will be some market equilibrium that's found, right? There won't be kind of constant supply going in or out of the system. And so that should be a decent store of value if you can find that equilibrium and that stability in the price.
Yes.
Theoretically.
Big F.
Yep.
And so, as an outsider who just is kind of interested in this and watching where it's going,
Mm-hmm.
I definitely think a lot of those thoughts.
Mm-hmm.
I think, if you really can't have something that people look at as a store of value
Mm-hmm.
that has 20 and 30% movements, because it again, to psychology.
Yep.
If we're getting all excited because our Bitcoin went up 30%, or we're despondent because it went down 30%, the fact is that does not lead to a sense of certainty about it. And, I think that's something that the U.S. dollar still has. I've read all the stuff on how it's a fiat currency and, yada, yada, yada.
Debt crisis,
But
and you get into them all.
yeah.
Yep.
And I'm not convinced. I'm just not convinced. And when we did the QE, it had no inflationary effect, and it had no inflationary effect because there was simply no demand for that money.
Mm-hmm.
It got put on people's bank balances.
Mm-hmm.
And when people understand that, they don't go crazy, right? And so I think I'm fascinated by the idea of a currency that can keep its store of value. I think the proof of work concept works really well.
Yep.
I think that the whole delivery system and the ability of transportability and all of that. Look, I think if you were designing a currency, there's a lot of really good features
Yep.
of cryptocurrency until, right, markets treat it like a speculative asset, as they have been.
Mm-hmm.
And then suddenly everyone's just like, I'm not going to do this stuff.
It's almost as if even if it is the best currency, but you lose the consumer confidence, right, of not only price volatility, right, but security, right, would be another piece. And then the part that I think gets lost in this conversation a lot is the acceptance. Right. So even if I can store value, I either have to believe that somebody else will one day want to buy this from me, right?
Yes.
To basically get out of that store of value. So another consumer, et cetera. But then if it's money, an actual currency, I have to be able to give it to somebody in exchange for some other value.
See, and that is the magic of currency systems. And if you know your monetary history, you know that we've used things all over the map as currency. Clamshells, literally.
Yep.
Tulips, obviously gold, and it has to meet the criteria you have just outlined. You have to be absolutely certain that if you want to buy my iPhone from me, that I will sell it to you and I will accept that currency as a store of value for myself. And you, conversely, have to have exactly the same belief.
Yep.
And so that's where I find this is kind of interesting, right? Because I think that if the crypto market had been able to kind of be introduced with a little less volatility, because the one thing that I do know from the stock market is volatility terrifies. And I don't mean, oh, I'm kind of nervous here. I mean, people do incredibly rash and silly things. We had clients in the financial crisis taking $250,000 out of their bank account and putting it in safety deposit boxes. And I would be on the phone with them saying, that isn't going to help you.
Yeah.
And so, when people are, and by the way, we are all the same. Everyone sitting in this room, everyone in your family and my family, everyone we've ever known. We are human beings, Homo sapiens sapien, right? That's because of the new prefrontal cortex. But we are still being, and I can't remember the author, and I would love to give credit to him because it's such a great quote. But he said something along the lines of, we are operating 21st century software on 50,000-year-old hardware. And, I think that just encapsulated. We just are not optimized. And so my thing was to say, you know what? I'm just going to admit, I don't know. I don't know. What I do know, that if I was left to my own devices, I would panic too. Right? Because I'm a human being, and haven't been excluded or excused from that class. And, I always shake my heads at the people who, I did a little experiment on Twitter last week, and I said, I put a picture of the Wall Street Journal from after the big crash in 1987. And I said, you're reading this for the first time. What do you do? Well, of course, like more than 100, back up the truck. But no, you wouldn't have. But that's what's so cool about the way the human mind works. They honestly believe that they would have. And they don't understand that they have hindsight and that happened 30 years ago. And so it's in the past and there's no emotion, right? And so you really, if you tried to get into an argument with them, you couldn't convince them that they thought that they were lying.
Yep.
That's the funny way the mind works. So I definitely think that we are all subject to these rules. And if you want to understand any financial instrument, understand this human behavior and interaction, and then see where are you in that phase.